Hey, what's up, money mavens, retirement dreamers, and future millionaires? Welcome back to the channel. Let's kick things off with a harsh reality check most people don't see coming. If you retire with just $100,000 in savings, you're on a fast track to going broke. Way faster than you'd think. Picture this. You're spending a modest $2,000 a month, maybe rent, groceries, a few bills. Do the math. That's $24,000 a year. Your entire $100,000 nest egg? Wiped out in just over 4 years. For years. What happens next? You're either dragging yourself back to a 9 to 5, leaning hard on Social Security, if it's even enough, or worst case scenario, staring at an empty bank account with nothing left to fall back on. Scary, right? But hold up. What if I told you that same $100,000 doesn't have to vanish? What if you could flip it into $3 or $4 million instead? What if you could invest it once, sit back, and watch it grow into a fortune without juggling individual stocks or sweating every market dip? In today's video, I'm breaking it all down for you and our pal John. I'll unveil the 3 best index funds that can make this magic happen, show you exactly how much each can deliver, and stick around to the end. Spotlight the one fund that could turn that $100,000 into nearly $4 million, pumping out $10,000 plus in monthly dividend income. This isn't a pipe dream, it's a plan. Ready to turn your retirement savings into a cash flow empire? Let's dive in. First, let's get the basics straight. What's an index fund? And why is it your ticket to millions? If you're new to investing, don't worry. I'm keeping it real and relatable. An index fund is like a giant treasure chest packed with stocks from tons of companies. Instead of betting everything on one horse, like dumping all your cash into Tesla or Apple, you're spreading it across hundreds, sometimes thousands of players. It's diversification on steroids. If one company stumbles, others can pick up the slack, keeping your portfolio steady. Investors are obsessed with index funds for a reason. They're simple, cheap, and they've got a killer track record. Unlike actively managed funds, where some hotshot manager tries to outsmart the market and charges you hefty fees for the privilege, often missing the mark, index funds just mirror a market index, like the S&P 500 or the total U.S. market. No guesswork, no drama, just steady growth tied to the economy's long-term climb. Fees? Barely there. Sometimes as low as 0.02%. That means more of your money stays invested, compounding like crazy over time. Best of all, it's hands-off. You plump down your cash, and the fund does the heavy lifting. No late-night stock charts or panic selling required. This isn't about chasing the next big fad or gambling on a single winner. It's about trusting the market's slow, relentless grind upward. Patience is your superpower here over decades. That grind turns $100,000 into millions. So, how do we take $100,000 and stretch it to $3 to $4 million? It's all about picking the right index funds, ones with the perfect mix of growth, stability, and income. Let's count down the top 3, starting at number 3. Vanguard S&P Small Cap 600 Index Fund, ticker VILO. This fund's all about the little guys. 600 small-cap U.S. companies that don't grab headlines like Apple or Microsoft, but pack serious growth punch. Why small caps? They're nimble. Think startups scaling up or regional firms hitting their stride. Historically, small caps outpace big caps over the long haul. More room to expand, less baggage. VILO tracks the S&P Small Cap 600, a benchmark of these scrappy players across industries like tech, healthcare, and manufacturing. It's not about big dividends up front, yields a modest 1.47%, but about share price appreciation, averaging 7.09% annually. Dividend growth? A solid 11.18%. Payouts climb over time. With 600 companies, you're diversified, retail flops, but industrials soar, balancing the ride. Vanguard's low-cost DNA shines here. Expense ratios just 0.07%. or $70 yearly on $100,000. More cash stays in play, compounding like wildfire. Small caps can be bumpy, more volatile than giants, but patience pays off. Think 1980s tech startups. Early investors rode waves to riches. VOOs at Vibe, slow burn, big reward. Fort Johns $100,000. Year 1, $108,560. $1 for 70 dividends, $7,090 growth. Year 10, $233,700. $3 for 36 dividends, $286 monthly. Year 20, $591,000. $8, 688 dividends, $724 monthly. Year 30, $1,686,742. $71, 923 dividends, $5,994 monthly. Total value added, $1,586,742. $1, 059, 242 growth, $527,500 dividends. Solid, but we're aiming higher. Next, number 2, WisdomTree US Value Fund, ticker WTV. This one flips the script. Forget small cap growth. It's about value investing. Think bargain hunting, stocks priced below their true worth, like snagging a $50 jacket for $20. WTV targets established U.S. companies with strong fundamentals, earnings, dividends, cash flow that the market's sleeping on. These aren't flashy tech unicorns, they're steady eddies. Think old school manufacturers or retailers weathering storms. Yields 1.49%, $1,490 on $100,000, close to VIO, but its 12.69% dividend growth rate outshines, and 9.77% share price appreciation crushes it. Why value? Stability when markets tank. Value stocks hold firmer than growth darlings. WTV's methodology digs into fundamentals, not just size. Think undervalued giants with fortress balance sheets. Volatility's lower, less roller coaster, more cruise control. Expense ratio? 0.12%. $120 yearly, still cheap. It's not chasing moonshots. It's banking on the market, waking up to these deals. Think Warren Buffett. He's built billions on value. Fort Johns $100,000. Year 1, $111,260. $1 for 90 dividends, $9,770 growth. Year 10, $296,200. $4 for 10 dividends, $367 monthly. Year 20, $923,500. $13, 760 dividends, $1,147 monthly. Year 30, $3,781,146. $93, 649 dividends, $7,804 monthly. Total value added, $3,681,146. $2, 983, 246 growth, $697,900 dividends. Triple the haul of VIO. Values power unleashed. Finally, number 1, Fidelity Total Market Index Fund, ticker FSKX. This is the granddaddy, covering the entire U.S. stock market. Large caps, mid caps, small caps, everything. It's the ultimate set it and forget it play. Thousands of companies across every sector, from tech titans to tiny industrials. Diversification? Unmatched. One stock flops, the rest carry on. Yields 1.97%, $1,970 on $100,000. Higher than VUO and WTV. Dividend growth? 12.13%. Payouts swell fast. Appreciation? 10.53%. Best of the trio, riding the full market's wave. Expense ratio? A razor-thin 0.02%. $20 yearly. Fidelity's gift to your wallet. It's not small cap risky like VIO or value focused like WTV. It's the whole enchilada, blending growth and stability. Think 1990s boom to today's AI surge. FSKX catches it all. Fort Johns $100,000. Year 1, $112,500. $1, 970 dividends, $10,530 growth. Year 10, $329,700. $6 for 97 dividends, $541 monthly. Year 20, $1,181,138. $23, 268 dividends, $1,939 monthly. Year 30, $3,945,793. $118, 350 dividends, $9,862 monthly. Total value added, $3,845,793. $3, 034, 653 growth, $811,140 dividends. Nearly $4 million, just shy of $10,000 monthly. FSKX reigns supreme. So $100,000 doesn't have to vanish in 4 years. VIO hits $1.7 million, WTV $3.8 million, FSKX $3.9 million. Each a retirement game changer. Skaxa's the champ, broad, cheap, relentless. No $100,000? Click the video on screen for 3 dividend stocks to beat your job with $50 weekly. Love this? Smash that like, tell me your pick below, and let's keep building that fortune together.